Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. There was an unexpected turn in the US tariff situation late last week. In a dramatic ruling, most of Trump's global tariffs were declared illegal by a US appeals court that found he exceeded his authority in imposing them. He will almost certainly appeal this to the US Supreme Court. Then over the weekend, we got the official Chinese PMIs for August, and they extended the sluggish environment in their manufacturing sector. Despite the 90-day extension before punitive tariffs kicked in with the US, orders contracted for a fifth consecutive month. On the services side, however, they maintained their small expansion in August, albeit marginally better. But early data suggests their housing slump is not ending, maybe even getting worse. Sales volumes in August are likely more than 17% lower than a year ago. Although it is a shortened week in the US, it ends with the August jobs data. Markets expect another weak result, just 78,000. You recall that the weak data last month saw Trump fire his agency head who compiled it. So there will be special attention this time on its believability under the Bureau of Labour Statistics Agency's deputy. Before that, we'll get lead-up jobs data, ISM PMIs, and other data for the US. Canada will also release labour market data. The EU will release inflation data, and others will release GDP data for the second quarter of 2025, including from Australia on Wednesday. At the end of last week, July data out in the US shows that disposable personal income was up 2% from a year ago. Disposable consumption expenditure was up 2.1% on the same basis. On a month-on-month basis, the income was up 0.4% and expenditure up 0.5%. These elements are not major, but they do indicate a tightening in household financial budgets. And nested deep within this release was that core PCE inflation rose 2.9% year-on-year in July, its largest rise since February and above the Fed's target and comfort zone. Tariff costs are getting the blame. Financial markets noticed. And that is the same sort of tightening indicated by the widely watched University of Michigan Sentiment Survey. In its final August version, it fell back markedly from its initial readings, a clear indication households are finding it tougher. It is now 14% lower than a year ago. The Biden boom is now just a memory. On the factory floor, the latest indicators are shifting down too. The Chicago PMI headed south quite sharply to be 10% below year-ago levels. And the US seems to be losing the tariff war it started, and Americans are paying the tariff taxes. The latest trade data for July shows that US merchandise trade deficit jumped to $104 billion in the month, exactly the same as July a year ago and far above expectations of a $90 billion deficit. It is their largest in 4 months. Imports jumped 7.1% from the month earlier, led by industrial supplies, capital goods, food and consumer goods. Meanwhile, exports slipped 0.1%. Certainly American farmers are not happy, and they have a president who probably doesn't even know where Pakistan is, let alone where other simple facts. In Canada, they got a sharp dose of shock in their second quarter 2025 result from the sharp turn on them from their southern neighbour. Their GDP fell 0.4% in the quarter and cancelling out the 0.5% gain in the first quarter. Year on year, their GDP is still up 0.9%, however. Across the Pacific, the economic data is generally much more positive. South Korea's retail sales surged 2.5% in July from June, a big jump from the revised 0.7% increase in June, and marking the fastest growth in over 2 years. From a year ago, it's up 2.4%, and that too is the most since January 2022. And South Korean industrial production grew solidly in July as well, up 5% from a year ago. After a good gain in June, Japan's industrial production fell 1.6% in July, reversing a 2.1% June gain, and much more than the 1% decline anticipated. And Japanese retail sales rose only 0.3% in July from a year ago, slowing sharply from a downwardly revised 1.9% gain in June and falling well short of market expectations of a 1.8% increase. But Japanese consumer confidence actually rose in August to its best level of the year, with gains across all surveyed questions. But we should also note that protests in Jakarta in Indonesia on Friday have turned deadly and put Indonesia on edge. They've spread over the weekend. Canberra will be watching nervously. In Europe, the ECB's survey found that consumer inflation expectations were stable, that is well anchored in July, at 2.6% for the year ahead. Globally, air passenger demand was up 4% in July, driven by Asia-Pacific's 5.7% rise and held back by North America's 1.9% rise. Most of this is due to international travel. Meanwhile, air cargo traffic was even stronger in July, up 5.5% from a year ago, up 6% for international trade. Asia-Pacific was the strongest region here too, up 11% for international cargoes. But North American international cargo volumes only rose 1.5%, the weakest global region. The US Treasury 10-year yield is now at 4.23%, unchanged from Saturday, but down 3 basis points from a week ago. And the price of gold will start today at $3,447 an ounce, up another $5 from Saturday and close to a new record high, but basically a measure of the US dollar markdown. A week ago it was $3,371, so a net $76 gain. And American oil prices are little changed at $64 a barrel, with the international Brent price just holding under $67.50 a barrel. And the Kiwi dollar is now at just under 59 US cents and unchanged from Saturday at this time, but up 30 basis points for the week. Against the Aussie, we're holding at 90.1 Australian cents. Against the euro, we're unchanged at 50.5 euro cents. That all means our trade-weighted index starts today at just under 66.5 and unchanged from Saturday, but up 20 basis points for the week. And the Bitcoin price starts today at $109,022 and up 0.5% from Saturday. But it is down 6.7% for the week. Volatility of the past 24 hours has been low, at just on plus or minus 0.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.